Welcome back to Whiteboard Finance. My name is Marco and I'm here to help you master your money and build your wealth. Today we're talking about how to pick stocks for beginners, but even if you've been investing for a few years or if you're intermediate or advanced, stick around because you may learn a couple things here that you may have not known about. The information that I'm sharing today is how I personally pick stocks. This may not be the best method for you, so keep in mind this is just my personal philosophy. This is not some written in stone, and it's not some rule that's been used by hundreds of thousands of other successful investors. This is just the way I do things. So without further ado, let's get into it. Number one is I like to use stock screeners. So stock screeners, if you don't know, all you have to do is simply go into Google and type in stock screener. You'll find 1,000 of them, you guys. There's a bunch of them. I personally use Yahoo Finance, and the way you can use a stock screener is that you can look at fundamentals and technicals of certain companies, but what I like to do is stick to the fundamentals. So essentially, I'm more of a conservative investor. I do hit doubles and triples every now and then, but I like to consistently hit singles and doubles. I'm not really swinging for the fences on any of these stocks, you guys. So keep this criteria with a grain of salt and keep in mind that this is just how I do things. So with these stock screeners, the first thing I like to do is look at a dividend yield. So I look for a dividend yield over 1.5%. To me, this shows that the company has cash on hand and that they're giving out somewhat of a nice dividend over the long term. Also, the second piece of criteria I look for is, have they increased their dividend in the past X amount of years? So have they consistently raised that dividend over the past 5 years, over the past 10 years, over the past year? I mean, it just depends on what your preference is. I personally look for the past 10 years because that indicates a strong management team and a strong money management philosophy. Number three is I look for a beta below 1 versus the S&P 500. So this is essentially showing me how risky the stock is or isn't. Number four, revenue growth. So I look for revenue growth over the past 3 years. I'm looking for a consistent uptrend to make sure that the company is growing their revenue. Number five, the price to book value ratio based on their peers in that industry. So you want to see, say for example, you're looking at Citibank or another financial stock. You want to look at all the other financial stocks in that sector and see the price to book ratio and see if it's below their peers. And same thing with number six, the price to cash flow below their peers in that industry. So same exact example that I just gave. If you're looking at Citibank, you want to see if that price to cash flow is below their peers within that same sector. Number two, read the company profile. So I know this sounds pretty basic, but you want to find out what the company does and how they make money. So what I like to do is I like to pretend that I'm the CEO of the company and I really want to get to know every business sector within my company. What this enables me to do is I'm able to consistently and succinctly describe what my company does in 1 or 2 sentences. So you may remember in one of my previous videos where I talk about I don't invest in something unless I can describe it in 1 or 2 sentences or describe how they make money in 1 or 2 sentences. The same philosophy goes here. So if you can't easily summarize what this company does and how they make money, forget about it. That's just my personal opinion. Number three, read the most recent quarterly report. So I look for things like revenue growth, liquidity, if the report matches what they say their company does, if they're kind of backing up what they say, they're putting their money where their mouth is. Also where they're spending their money and what their outlook for the future is. So I know that this sounds pretty basic, you guys, but these things are held to a pretty high standard when it comes to, especially when it comes to bigger companies, and shareholders really do hold the board accountable to what they say in these reports. So take a look at the most recent quarterly report to get to really know that company and where their outlook is for the next 3 to 5 years. Number four, compare that with past reports. So to piggyback off of number three, you want to take a look at these reports and see if they mesh. Are they kind of just talking out their rear end in one report and not following up with it in the next one? So you're looking for a trend of consistency. So you want to find out how they've progressed year over year, both in numbers, so quantitative and qualitative statements. So qualitative means, the things that they're saying in terms of characteristics. Quantitative is numbers, so year over year growth, things like that. So a perfect example of this is Amazon. Amazon is expensive, and when you look at it just from a straight up number standpoint of what their one share of their company costs, but they've grown a lot of their business areas. So like the acquisition of Whole Foods and things like that. In my last video, I covered Amazon as one of the best stocks to buy for January, and their year-over-year growth in Q3 from 2017 to 2016 grew by about 39%. It was insane. So you want to compare past reports to current reports. Number 5, look at management, board of directors, etc. Anyone who's kind of like the head honcho within the company, you want to see who's really running this ship. Who is the captain of this ship, and do they know where it's going? So what I would recommend doing is actually finding out who they are, whether it's management or board of directors, search them individually and find articles or videos that talk about them and actually watch them speak. There's a ton of videos out there, you guys, of these people actually speaking. Are they someone that you can put your money behind? Are they kind of like sleazy? Are they in it for the money? Are they in it for the shares that they're going to dump at the end of the year or at the end of their employment? You know, a lot of CEOs, they know they're gone in 2 or 3 years, so they're just looking to raise the stock price and cash out. So really do some research behind the people that run the ship. Number 6, last but not least, look for public relations or PR about the company. So the 10Q or the 10K can't give you day-to-day operations, but social media and the news can. You know, everything is current now, you guys. All you have to do is go to Google Finance or Yahoo Finance and type in a company or type in that stock symbol, and it'll give you all the recent bullet points and news about that company. So look over the past year or so, because a lot of things can change within a year. And again, just look over for any red flags. You want to make sure that they're not in any major lawsuits or anything that's going to hurt the health of the company overall. And that's it, you guys. It was a very quick video, but I think if you follow those 6 steps, you should be 80% on the way to picking a decent stock. Obviously, I'm not Nostradamus and I can't predict the future, otherwise I'd be a multi-billionaire. But ultimately, this has been pretty successful for me over the past 12 years of investing. If at any time from step 1 to step 6 you don't feel comfortable, just walk away from the stock. There's thousands of stocks out there, you guys. You don't have to get married to any one. So take emotions out of it, look at the numbers, look at the people that guide the ship, and make sure that it's a good crew. So ultimately, you're investing in the health of a company, and I'm a long-term investor, so I look for things that are going to be in place for many years. So I look for long-term growth. Your investment style or philosophy may be different, but at the end of the day, like I said, if you're using these 6 steps, you're pretty much 80% of the way there, you guys. Good luck to everyone. If you got any value out of this video whatsoever, please hit the subscribe button below. It takes a lot of time to make these videos, and I don't ask for anything in return. Thank you so much, and have a prosperous day. Okay, so what we're gonna do is, I want you to pick a penny stock. You're gonna pick a penny stock, and what's gonna happen is, I'm gonna talk about it on Reddit, okay? We're gonna talk about it on Reddit. I'm gonna pump it up. We're gonna pump it up nice and high. I'm gonna make a YouTube video about it. I'm talking about this penny stock that's gonna go really high through the roof, 1000% gains. Yeah, let me get the blue marker. Yeah, the blue and the green, yeah. 1,000,000% gains. We're gonna pump it up nice and high, and we're gonna make like, hold on, it's not even right. I'll teach you in November how I made 1,066% returns. All you have to do is buy my course. Just 27 easy payments of $8 million. I'll teach you how I made 8 million% in November. Buy my course.